Hello, hi. Assalamualaikum and good day everyone. My name is Khairul. In this video, I'm going to discuss a small topic relating to accounting that is reserve and also bonus issue. Okay. So what is bonus issue? Bonus issue is when the shareholders of the business, the company, receive additional amount of shares without incurring any cost. Normally, the business or the company will provide or will give the shareholders a certain proportions based on the existing number of shares as a dividend, or we call it as bonus issue. So this result in additional number of shares for the shareholders. Yeah, let me repeat again. Bonus issue is is additional shares given to the existing shareholders at no cost. The journal entry basically is just a transfer from reserve to the share capital. So no payment received from the shareholders. However, the empirical evidence shows that the stock market tend to increase when the company announce a bonus issue decision. That will be discussed in the next slide. So this is just a simple illustration about bonus issue. This company has a share capital of 500,000 unit of shares. It used all its general reserve. They have general reserve amounted 100,000, and to make one for 20 bonus issue. It means that for every 20 unit of existing shares, the shareholders will receive one new share. So 500,000 multiplied by 1 over 20, this gives a value or amount of 25 shares. Okay, which equivalent to 100,000. So what is the journal entry? First, we're going to close or reduce our general reserve accounts. This is our reserve account credit. So to close this account, we are going to debit 100,000. Okay. On the other side, the share capital will increase from 500,000 shares or unit here, to 600,000. So I'm going to credit the share capital, mean increase in shares by 100,000. There is no cash involved here. However, based on the study or research done by academicians, we found that there is an increase in the stock prices. So the possible reason is it might indicate a future dividend increase as the shareholders' shares increases in a later date when the company make additional announcement of cash dividend. For example, 5 cents per share, the shareholders will receive more dividend since their number of existing shares has increased. On top of that, there are also other explanation why the company making bonus issue, for example, as a strategy to prevent takeover bid, or they want to adjust or distribute the effect of devaluation of assets. Over the time, the value of assets, for example, property, plant, and equipment, increase. So when they perform revaluation, so they have this asset revaluation surplus. Some of the company, they tend to distribute or transfer this surplus to the share capital, or they want to provide additional return to the shareholders, though this is not a cash return, but this will please investors as they receive additional shares, and some might perceive that it will lower the current price, or but many study have found that it increased the share prices. Yeah, so these are among the reason why firms involve or pursue bonus issue strategy. Next, I'm going to discuss about reserve. We know what is share capital. Another term that is very common in accounting is reserve. This is a generic term for all equity accounts other than contributed capital. Contributed capital is amount contributed by the shareholders, or we call it as share capital. Other than that, we call it as reserve. So the main component of reserve is retained earning, also known as retained profit, or maybe accumulated profit or accumulated losses. So under ASB 101, equivalent to IAS 1, or in para 8, it say that all item, income and expense, okay, to be included in a profit and loss, and otherwise unless stated. Yeah. So what is retained earning? Retained earning has the same meaning as retained profit or profit and loss, result from matching the revenue and expenses. Okay, if your revenue is greater than your total expense, you have make a profit, and this profit will go to your retained earnings account. Okay, the main other movement in retained earnings account is number one, dividend paid. When we paid dividend, our retained earnings account will reduce, or we can transfer to and from other reserve. It can increase or decrease as a result of transfer to or from other reserve. And we also make amendment to our retained earning accounts if there is any policy change or errors happen in a current year or in the preceding year. So this will affect the total amount of retained earnings. Other than retained earnings, business can have many kind of reserve. For example, asset revaluation surplus. As mentioned earlier, when firms assets, for example, property, plant and equipment increase significantly in value, so the firm has a choice to revalue their assets. So they will increase the value of the assets, and on the other side, they will also create another reserve, call it as asset revaluation surplus. Next is foreign currency transaction reserve, as business run or operates globally. So when they perform transactions, close the account, prepare reporting, we need to prepare one reserve. We call it as foreign currency translation reserve. And finally is financial instrument reserve, which will be discussed in the next video. Thank you so much. Okay, bye-bye.